All right, traders, we're back for another round of our chart reading sessions. As we do every week, if you're an options trader and you want to make money in the markets, you have to learn how to read the stock charts. Your number one goal when trading stock options is you have to have an idea of which way the stock's going to move. Is it going up? Is it going down? Is it going sideways? You can't trade options unless you know what the stock's going to do. You're just going to trade an option out of the blue and just say, I want to buy a call or I want to buy a put option and you have no idea which way the stock's going. You're going to lose so much money. You don't want to do that. So as we do just about every weekend, I make these free videos for the trading community. I've been in this business for over 30 years now. Stock chart reading is what you have to do. And that's going to up your option trading game immensely. You have to have an idea where the stock's going to go. So we're going to run through the charts. I'm going to show you what I use on my charts. I'm going to show you what I'm seeing. We're going to look at some stocks. We're going to look at indexes. And we're going to get ready for next week's trading. That's what you have to do. You got to put in the time. You got to put in the effort. If you want to be a good options trader, you got to do the work. All right. So let's just jump right in and start looking at some charts as we always do. All right, everyone, Lee Lowell here from smartoptionseller.com. We're looking at charts. That's what we do. And we want to see what's been happening in the market and get an idea of what may be going forward so we can make smarter option trades. What do? For those of you that are new, what you see on your screen in front of you, these are the charts that I use. Up here is the price action in this area. 2-year look back period, pretty much. This is a chart of the SPY, the SPY, the exchange traded fund for the S&P 500. Down here is the RSI indicator that I use. There's tons and tons and tons of indicators. Some people think having more indicators on your charts give you a better chance of figuring out where the market's going to go. In my opinion, no. You're going to end up with a jumbled gobbledygook chart with so many things you won't even see the price action. So what I have up here is each one of these dark lines is 1 day's worth of trading. These are open, high, low, close bars, and they're not candlestick charts. And I have 3 moving averages. I got a 20-day, I got a 50-day, and I got a 200-day simple moving averages. As I said down here, this is the RSI indicator. It's a 14-day look back period, and the overbought, oversold levels is the 80 level and the 20 level, and it oscillates between overbought and oversold based on the price action up here. So those are the only indicators that I use. The rest of the stuff that helps me figure out which way a stock or market is moving is by looking at the trend. You will always hear the phrase, the trend is your friend. How do you know which way a stock is trending? Just look at the direction that it's moving. You can obviously see this is a downtrending market, and you can see this is an uptrending market. And we draw these lines. These are called channels. These are manually drawn to help us see which way a stock is trending, and then you want to play the trends based on the channel that it's in. You want to try to sell at the top if you're a short-term trader, buy at the bottom, whatever type of trader you are. Since we sell put options at the Smart Option Seller, that's what we do. We sell put options. We sell put option credit spreads. So we're looking for bullish entries. We're looking for higher probability timing patterns, which is basically a bounce off either the bottom edge of a channel or a bounce off a moving average. Okay, that's our timing pattern on when to get in on a new bullish trade. Now, when you have a strongly trending stock or index, it will move along the moving averages. The 20-day moving average is a fast moving average. It takes 20 days worth of trading, and it averages out over time. So a strongly trending market will hug along the 20-day moving average. And when a stock starts to pull back a little or is not trending as much, it may come along the 50-day moving average. And down here is the 200-day moving average. So since we're bullish and we look for bullish trades, we want to look for stocks that are pulling back to the 20-day moving average or the 50-day moving average, or at least the bottom of the channel. That is our higher probability setup to get into a new trade. So what's been happening in the market? Okay, this is, as I said, here's the symbol over here, the SPY, SPY. The market has been just going up, up, up since last October 2023. You can just see the nice move here. All-time highs this past week in the S&P 500. That's great. And it's been hugging along the 20-day moving average. That means it's very strongly uptrending. And also with the upsloping, stocks that are trending strongly have upsloping moving averages. So this is a strongly trending up market. Okay, so what do we do? What do we see? What's going on in the market? So we hit all-time highs this past week, but also it started to sell off a little bit. You can see how the market is hovering or hanging on to that 20-day moving average here right now. So what's my outlook? What do I see? Well, there's always going to be pullbacks. We want pullbacks from time to time. That's what's healthy for the market. This market's gone straight up since October. Having pullbacks is healthy. We don't want a market that's just going to go straight up, because when it does pull back, it's going to be really strong and nasty and have that really sell off that scares a lot of people. We don't want that. We want a nice organized up move that has pullbacks along the way. That means it's a healthy market. Now, right here, we're having a little pullback and it's hovering right on the 20-day moving average. So what I want to see for next week is if the uptrend is going to continue, it may consolidate for a day or two before moving on the next leg higher, or it may continue the sell-off and come in contact with the 50-day moving average, which it hasn't touched since basically last November. So, if it gets to a pullback to the 50-day moving average, then we wait a couple days to see if the bounce occurs. You don't have to jump the gun. You don't have to front run these things. You want to wait for that timing pattern, that higher probability timing pattern, to see if the market's going to make the move that you want. So we want to see maybe some consolidation. And then once that next up move starts, that's when you can get in. Okay. So that's a nice, strongly uptrending market. The RSI, in the mid 50s. So it's not really overbought, not really oversold. So I'm not worried about that. Yes, there's always news out there that can derail a market, but those are short-lived things. Right now, in the U.S. at least, we know inflation's still, a little high. Interest rates are still high. We know the war's going on in Ukraine and Gaza. These things are known. But are these things going to stop companies from still creating products? And are people going to stop buying these products? Is Apple automatically just going to stop making iPhones? No. Just because of all these other things that are happening in the world doesn't mean companies stop working. And the indexes are made up of these profitable companies that keep pumping out products and people keep buying. That means their revenues are going to go up all the time. That means the stock price has to go up. Okay, so in the long run, the stock market goes up with these bouts of with selling. Okay, I'm a long-term bull, so I'm always using these pullbacks as an opportunity to nibble and to get long. For the next leg higher. So right now, the market's been really strong. Can we use a little bit of a pullback? Yes, that is a good thing. Will it come back down to the 50-day moving average next week? We just don't know yet. But it's okay to sit on your hands and wait until the move develops. Okay, you don't always have to front run these things. You don't always have to make a guess before it's time. Wait for the confirmed price action. And that confirmed price action would be the start the leg up higher for the next move, and then you can get in. You may not hit the exact bottom, but at least you're getting in early enough for that next leg higher. Okay, so the S&P looks pretty strong. Let's check the triple Qs, the NASDAQ here. Just as strong, but you can see it's sitting on the 50-day moving average. Right here's the 50-day. So it came back down to the 50-day. And what we want to wait for next week, see what's going to happen. Is it going to pop through and have some more selling, or is it going to find its footing and get ready for that next leg higher? Okay, so you want to wait for some of these confirmed signals. Let's look at the Dow Jones. This is the DIA. They're called the diamonds. This is the exchange traded fund for the Dow Jones. This one has now hugging along the 50-day moving average. Fell below it a little bit intraday, but on a closing basis, it's sitting right on the 50-day. RSI has been coming down. So here's an interesting pattern that we can look at. This is what's called divergence, where the price action is moving up, but the RSI is moving down. This is called bearish divergence, which means that based on the RSI, the buying has sort of been not as strong, but slower than it has been. But even though the price action's been going up, so you had the little sell-off here. So finally, some of the froth got taken out. RSI's come down, but will it keep going? Will it keep going? We don't know. You can see the price action here is higher than it was here, but the RSI is lower. So we're going to take the next couple of days and see if the market could find its footing before we get in. We want to wait to see if it starts that next leg higher. So we're playing with a little caution in the early next week. So let's start to take a look at individual stocks and see what we can find. Now we look at a lot of the more popular stocks because we don't have time to go over all 5,000 stocks here. So let's quickly look at Apple is the first stock we want to look at. Now you can see Apple has been trading basically sideways, going up and down, but currently in this downtrending channel. So here's the channel that we draw. It doesn't have to be exact, just connect some of the tops, connect some of the bottoms. Clearly Apple's in a downtrend, but it's trying to find support right around that 170 level. It's holding on for dear life. How do you find support? You look back in the past for areas of where the stock couldn't get through or wouldn't fall through in the past. So you can obviously see this 170 area is a huge area of interest for Apple. If Apple is going to get on moving higher and get some mojo back, it has to hold on to the 170 level here and pop back above the downtrending channel and get above the moving averages. You can see the 20-day is downtrending, the 50-day moving average is downtrending, and the 200-day is starting to curl over. That means Apple is certainly not a strong stock at the moment. I don't foresee Apple really, massively moving higher quickly because we have all these shorts in here. People have been keeping this thing down. So it has to find support right here at 170. If it could blast through the 20-day moving average, which is here, if it could get above the downtrending channel and move, towards the 50-day moving average, then I may have some more confidence that maybe Apple's starting to turn higher. But for right now, I'm not willing to get into a bullish trade because it's sitting right here. And so if there's a lot of selling come in, it's going to push this thing down to, there's really not a lot of support below it. It'd probably go every $5 a clip here for Apple. So if Apple's going to stay afloat, it has to get some movement here to the upside to give people confidence that it's time to start getting back in. So we're in a wait and see mode for Apple. Let's look at a stronger stock. The stock that I love the most more than anything right now is Microsoft. This is the best looking chart that I've found out there. Look at this beautiful pattern for Microsoft. It's just been going up, hugging along the 20-day moving average as well as the 50-day moving average. Everything is upsloping. Every time it pulls back, it goes up again. This is such a great, strongly trending stock that I would feel comfortable getting into a bullish trade when it pulls back to one of the moving averages, which it has done right here. Had the pullback, this 1 week of pullback, sitting right on the 20-day moving average, and it bounced. You can see the little dash mark on the right side of the bar is where it closed for the day. So the bottom of the bar is the low of the day, and it closed up here near the high of the day. So Microsoft still strongly trending higher. I would be confident getting into either selling put spreads. I wouldn't sell naked puts because it's a very high price stock. So that's up to you. But for selling put credit spreads, this would be a great stock to do that on because it's just strongly trending higher. If you want to get a little information about what we do at the Smart Option Seller, go to our website, smartoptionseller.com, and learn about what put selling is. That's our bread and butter. We sell put options. Get our free ebook, Put Selling Basics. Go to our website, click on the link, the header here, scroll down, put in your name and email address here. We'll send you an email that has a free copy to the book. Other things that we do here, services tab, we have our newsletters, we have our coaching, we have our calculator, and we have our 5-part video series on deep dive into what put selling is all about. Okay, so let's quickly go back to the charts, but make sure you sign up for the free ebook. Microsoft trending high, nicely higher. Same thing. Let's look at Amazon. Chart's going to look pretty much the same. Come on, Amazon, where are you? Let's get the chart going here. Amazon, same thing. Look how it's strongly trending higher, hugging along the 20-day moving average. If you want to be an Amazon bull, either, wait for that next little pullback to the 20-day moving average, your higher probability setups. That's what you want to look for. And then you can get long. Meta, same thing. These are nice looking charts, strong strong. It's hugging around the 20-day moving average and it's powered higher. So these are the kind of stocks you want to look for. You want to look for the trend and get along with the trend as it pulls back to one of the moving averages. Now those channels, those are hand drawn. I told you, you can grab your tool, and you connect some of the tops and connect some of the bottoms. That's an uptrending channel right there. Right here, we had a little bit of a sideways channel until it broke out. So you use these channels to give you an idea, what's happening with a stock. Here's the support, there is the resistance, and it finally broke through the resistance. Once it's in a channel like this going sideways, it's storing up all that energy. So once it starts to break out, it should keep going strongly in that direction. Okay, so that's how you look for stocks. Let's look at SMCI is another stock that we like to talk about because it's just had a monster move from 300 all the way up to 1200. It's creating this congestion pattern right here. It's starting to consolidate all those big moves and getting tighter and tighter. Eventually, it's going to break out. So on Friday, it seems like we had a little breakout below the bottom of the triangle here. This is what's called a congestion pattern. So we want to see if SMCI is going to continue down through or if it's going to pop back up and go higher. Now you got the 50-day moving average lurking below. So if it does sell off a little bit more, look for the 50-day moving average to potentially stop that sell-off for the time being. But this is a very volatile stock, very expensive, so be careful if you're playing this stock. Let's look at NVIDIA. Another, one of these AI stocks, chip stocks, really having a good move higher. A little bit of sideways action here. We had this area of resistance before I drew this line. I can't remember how long ago I drew it, but obviously it popped through it, hugging along the 20-day moving average, but it's fallen below it. So maybe NVIDIA is on its way down to the 50-day moving average here, yet to be seen. I mean, it's a strong stock. There's a lot of buyers out there, so it may just keep going up. Keep an eye on NVIDIA. We actually put on a new trade on NVIDIA. We saw the put option credit spread. So we're hoping and wanting to see NVIDIA go higher. AMD is another player in that same market, but AMD's been having some trouble. It hit all-time new highs around 200 and what's the high here? Let me look at this. It was $227. It's come back quite a bit. It's come off about $60 a share since that high, but here's the support right in the low 160s. If you're looking to get long, potentially get long on AMD, here's that support line. Maybe you want to wait to see if it falls back a little bit more. If it falls through, it may head towards the 200-day moving average, or it may find support in the low 160s and then start to move higher. You don't always have to jump the gun. You can wait for that confirmed up move. If it starts to curl up here, then that means it's found some support and probably will start to move higher again. This is a pretty good pullback. So you could be getting in for an opportunity on AMD. What else? Google, also pretty strong stock, moving up pretty good, just hugging along some of the moving averages. A little bit more choppy than, say Microsoft, but certainly moving in the right direction. Micron, another strong stock as well. This long blue line that's probably on the monthly chart. So let's go out to the monthly to see what I drew on that. All right, so this was the tops. It had 1, 2, 3. This was a quadruple top pattern before it actually blasted through. So we drew this line long ago, waiting to see if it was going to get knocked back down, or look how strongly it blasted through. Once it gets through major resistance, it's going to keep going. Micron, just look how strong that move has been just in the last month or so. You can see right here, just powered higher. Micron, a strong stock as well, but it's sort of up here in no man's land. Little overbought on the RSI. So probably if I was to play Micron, I'd wait for a little bit more of a pullback. The 20 days is going to start moving up. Price action could start moving down, maybe meet somewhere in the middle here. So I'd be holding off on Micron right now, just because I think that the buying is just a little bit overheated there. So these are some of the things you want to look for. What else? What other stocks do we like to take a look at? Netflix has been another strong stock. You could see hugging along the 20-day moving average. So if you wanted to get long Netflix, here is your opportunity was right here in the middle towards the beginning of last week. bounced off the 20-day moving average, starting to move higher again. So these are the strong stocks you want to look for, the trending stocks. Now, if you want to be a bear, you have to find a stock that's in a downtrend. Now, Netflix had a really tough 2022, or at least first half of 2022. It fell from $700 all the way down to about $175. So if you were a bear, you could have played this bear move all the way down. You would have drawn your channels. But, Netflix has basically climbed almost all the way back. It's up to 636. So let's scroll out to the longer term monthly chart here. So you can see Netflix got slammed, but look how it's come all the way back. All right. So it's going to be gunning for those all-time highs at some point. So keep an eye on Netflix. Let me go through the list here, look at some other stocks that may be worth looking at. Nike, sort of down in the dumps here. One of the greatest companies of all time. It's getting beat up a little bit. Let's maybe draw a little bit of a support level here for Nike. Here's some of the support, long-term support here in the low, mid 80s or so, right there. Will it hold? Will it hold here? Let's move up here a little bit. So, $85 is basically the line in the sand here. If it falls through there, it could keep going, but maybe it'll bounce off the support area and then move higher. So if you're itching to get in on Nike, maybe you sell some deep out of the money put options, or maybe you nibble on a few shares here, try to grab it, try to maybe pick a bottom, but it could keep moving. So I'm going to keep an eye on Nike. If it bounces off the support area and starts to move higher, that could be your higher probability timing pattern that Nike could be a good buy there. We look at Disney also, because Disney finally has broken out from the downtrending pattern that had been in for a long time. $80 was that level. Let's go out to the monthly. So you want to look at some longer term time frames here. You can see $80 was that level. Here's the COVID low as well, $80, long-term $80 support line, and was also hugging along the 200-day moving average, which is really that last line in the sand for the support, and it bounced right off of that, around $118 now. So it rallied a good $38 a share. So I think Disney has, finally made the turnaround, and, as you can see, look how it stopped right on the 20-day moving average. So use those moving averages to your advantage when you're looking at these stock charts to try to help you gauge, when it may be time to get in or out of a trade. Tesla. Okay, let's talk about Tesla. Here's the channel that we've drawn. It's sitting right at the bottom of the channel, sitting on support, short-term double bottom here. This, if Tesla's going to make a move higher, it has to make it now. This is a make or break spot right here, a long-term support right around 160. Tesla has to start moving up for the bulls to feel good. Otherwise, if it blasts through here, the next line is right around $100, that last level of price action. So it's make or break. So we're going to keep an eye on Tesla here. If it starts to move up, you have a little more confidence that the up move can continue on. What else do we like? Pepsi, kind of churning around here, this sideways action. So there's really nothing for us to look at in Pepsi. Here's Warren Buffett's Berkshire Hathaway. If you want to get on board with something other than buying an S&P 500 fund, just piggyback Warren Buffett. Buy his Berkshire Hathaway fund. The guy's incredible. The chart's moving up. You really can't go wrong. They're actually on our website. I have a report that I wrote using Warren Buffett as our proxy for another option trading strategy. You can go on our website and take a look at that. What else? Looked at Google, looked at Meta. Anything else of note? I think that's about it. Let me bring in Verizon here again. So Verizon was a stock that I talked about for so long in these videos. If you've been with us for a while, Verizon had been in this downtrend. God, how long has it been? Since end of 2020, just gone from $62 all the way down. and down to about $30 a share, which it hit last October. And I talked about, I like Verizon. I like the company. I wanted to get long in the company, but I couldn't do it while it was going down. There's no sense of taking a bullish trade when a stock's in a downtrend. You need to wait for it to make the move higher. And here's where it started to turn last October. Got through all the moving averages right here. So would have been the area. We may have even did a trade on it back last November. It finally started moving up and got above all the moving averages, and the moving averages started to turn higher. And now it's been moving up since. So Verizon, if we were to take another bullish trade, I'd be confident if it pulled back a little bit more to say in the $41 range to potentially get long, because it's already in an uptrend, going to be pulling back to support at one of the moving averages. That is a higher probability setup for potential long trades. Now, of course, there's no guarantees. Verizon could fall all the way back down again, but based on the momentum, based on the trend, getting in long here is your higher probability opportunity. Okay. So that's about it. We want to use the charts as a way to help us gauge, where stock's trending, where it's going, where it's been, and use that timing better to help your option trades. All right. So if this video has been helpful to you, please give me a like, leave me a comment, give me a thumbs up, send me an email. I'll always answer your emails. Don't forget to go to our website, get the free ebook. In the description below, below the video is some other links, websites, books that I have in there that I think could be helpful to you. So take a look at that. All right. That's it for me. I hope everyone has a great week. And remember, you got to do the work. You got to look at the charts. You got to get ready for next week. You can't go in there trading blindly. So make sure you check your charts. All right, everyone. I'll see you on the next one. This is Lee Lowell signing off.